Hi everyone, in this episode of Take Charge Now, I'm actually filing from St. John's, Newfoundland. I'm going to look at the equity markets. We've closed the first quarter and how did they perform. But before I do that, I'm going to look back to 2022. It was volatile by any standard. Inflation continued to tick higher and central banks right around the globe continued to increase interest rates. There was nowhere to hide. Well, maybe the US dollar. Equity markets were down, bond markets were down, and cash was considered king. Now, fast forward to the first quarter of 2023, and the markets really did get off to a good start. In fact, we started to see inflation come lower, and as a result of all of those aggressive rate hikes, I think investors were starting to feel a little optimistic. However, February hit and we saw the failure of the US bank, Silicon Valley Bank, and of course the collapse of Credit Suisse. That certainly ramped up the volatility and investors were feeling very jittery. March, however, the US Federal Reserve does not raise rates by as much as expected. It was 25 basis points. Expectation was for 50 basis points. This had some wondering, okay, with inflation coming down, does this mean we've hit a peak level in terms of interest rates? Some investors began to think so. When I look at how the S&P TSX closed out the first quarter, it was up about 4.5%. The S&P 500, it was higher, just shy of 7.5%. Doing a lot of the heavy lifting was the technology sector, and of course that meant the NASDAQ did very well, and it was up just shy of 17%, and the MSCI World Index, call it about 4%. Now, where do we go from here on interest rates? When you look at inflation, the March reading in Canada still stands at 4.3%. The goods component, we're starting to see things come down, but not the service component. The Bank of Canada rate is at 4.5%. They would like to see inflation hit 2%. So 4.3, 2%, we're not there yet. Now, that doesn't mean the Bank of Canada is going to continue on an aggressive path of raising interest rates, but that doesn't mean they're going to stand pat. We could see another interest rate hike here in Canada. In fact, many economists on Bay Street think that that will happen. However, as we get closer to the close of 2023 and inflation that still remains high, especially the grocery component, starts to pull back, we may see rates start to come down in 2024. Time will tell. The big questions out there, and I don't have the answers. Will inflation remain sticky? And if the banks have to continue to raise interest rates, what will that mean to economic growth as well as corporate earnings? Time will tell. But what I can tell you is we are starting to see some investors sniff around for good quality companies that have been beaten down and that are leaders in their industry.